Hi, Michael. It's great to have you on the Fintech Frontiers podcast today. Thanks so much for taking the time to chat with me. And I'm really looking forward to learning about your background and the story behind Fxity. To kick things off, could you tell us a bit about your journey? How did you first get involved in fintech and e-commerce space? I understand you've had an impressive career with some leading companies in the Nordic region. I'd love to hear more about that experience and how it led you to your current fintech.
Yeah, hi Seven. Thank you for having me. So I've been working with fintech and e-commerce my whole life. I started off my first job after university was at Avanza Bank, which is largest online bank in Sweden, working with regular trading and development of that product. And I learned a lot at Avanza, and I learned specifically that I liked fintech, and I liked the environment, the things with fintech that are a little bit more tricky than in normal product development, and the regulatory space, of course, which is also challenging. And from that on, that's what I've been doing. I was me and my old business partner called Niklas Storåkers. We have been working together for many years now. We were the first investors in a company called Froda with SME lending in a European SME lending company. Also in Lysa, which is like a Nordic region betterment or wealth front automated investments. Currently, I am the CEO of a company called Fxity. We get back to what we're doing right now. We also sold a shopping comparison service that we worked on for many years to Klarna. I was in Klarna for 2 years also. So yeah, I've been working with this kind of businesses for a long time.
Fantastic. That sounds like you've accomplished a lot already, and you obviously learned an awful lot in your first online banking experience, and it looks like you've been very entrepreneurial in creating a number of ventures and exiting. So well done.
Thank you.
Nice work.
Thank you very much. I hope the best is to come still.
Yeah. Well, speaking of which, so tell us, you've obviously gained an awful lot of insights. And were there some particular insights into a gap in the market that led you to set up Fxity?
Yeah, there was. So not very known to the public, but very known to perhaps your listeners here in this podcast is the PSD2 Open Banking Directive, of course.
Of course.
Coming. So in what that basically said on a European level was that it's your data owned that is held at the bank. It's not the bank's data about you, meaning they had to open APIs.
Yes.
Yeah, so these APIs, they were quickly adopted and used by many great companies that we see out there today that have grown big, but almost everyone used the B2C, the consumer data.
Yes.
The PSD2 or BPS,
Mm-hmm.
and not a lot of people were throwing themselves on to the B2B APIs, so meaning getting company data, corporate data out of these APIs. And they were also included in the Open Banking Directive. So
right.
Yeah, right. So that's, I mean, if you want to identify a single interesting touch point to where I saw an opportunity, that is that. And then, of course, based on this data, you can do a lot of things. You can, you've seen a few rather successful companies. You see a lot in this, that some people call it CFO office or office of the CFO, etc., that you can build all kinds of cool treasury dashboards and whatever to gather all the data from all the different banks. And what we decided to do with Fxity is that we take this data and we handle liquidity and currency trading based on it. So basically what all the manual processes in a traditional enterprise treasury department is that you have to handle these different currencies all day long. No, you have to pay invoices, 10 million euros here and 2 million US dollar here, and you get some Polish zloty and some Swedish SEK and whatever all the time, in and out.
Yes.
And then sometimes you have negative balances. You want to overnight swap that so you don't have the negative interest interest rates, and there's a lot of manual processes here. And these processes have not been changed in many, many years. It's the same as the Treasury Department worked 20 years ago. And that's just unnecessary because now we can automate this. So that's what we're doing.
Great. So it sounds like first of all, the opportunity is that road less traveled. There was a lot of focus on that B2C data. However, you could see the opportunity on the B2B, that enterprise data was still covered under PSD2. And there's big problems in there, or challenges, shall we say, for enterprise, making sure that they're managing their liquidity across multiple entities and that they're able to meet their commitments and do so efficiently within the banking system and avoiding penalties, interest, etc. Great.
And when they do handle it, it's manual intensive. It's labor intensive. You have to do a lot of manual processes. So we're, for example, we're handling these processes for H&M, and that's instead of they could of course do exactly the same as a computer could, but it would take 12 people working day and night to handle these flows in the same way.
Right. Okay. So it's labor intensive. One thing, Mikael, that's coming to my mind now is that PSD2, great, opening up, opening up the bank's payments infrastructure and access to data through APIs. Super. It's only as good as the API. So I imagine that the efforts on the part of the banks were probably more focused towards that consumer data. Have you found that the APIs that you're using in the banks to pull that corporate data have been kind of reliable and scalable? Or I'm just interested to see what's going on that side.
It's a very relevant question, and I prefer to see it as a bit of a hinder, something making it more difficult for competition to us to get into this. Because if we can handle this, then that's good. But not everyone can. This is hard work. Of course, it's hard work. This is SR. It's from fairly good to terrible. It depends on where in Europe you are. It depends on the API structure. It depends on what kind of cash pools and companies and enterprise and what kind of deals they have. Depends on the tech team. Depends on exactly what person at the bank you get a hold of. And it's just, to be honest, it's a little bit of a mess. It works, but it's a little bit of a mess. And also, PSD2 was the basis to how we started. But now we can, of course, use whatever API or data is provided and needed. We connect to also treasury management systems or premium APIs that the bank has or files, so we can do other solutions also. But the answer to your question is the PSD2 API quality. It varies a lot. Does it?
Yeah. Okay.
And then now we're talking about Europe. If other markets also have open banking directives, US has come a bit. They have different versions. UK has their own format, of course, which is great, that I like a lot. Brazil has come quite far with this also. So, I mean, it's out there. Europe was early, and maybe that's what we're seeing. The banks were not mature enough to handle this when it was being rolled out.
Yeah, well, I understand that in the UK that actually Clearbank saw that the legacy nature of the main pillar banks was a challenge, and that all these fintechs who've got their beautiful singing, dancing front ends were being hobbled at the back end, and that they entered there to provide the kind of APIs that are kind of real time and highly responsive. So I think they've done very well given access to the clearing there. But
I agree, and it's a little bit, it's different approaches. I mean, Europe has gone for the regulatory approach. It's you have to comply to exactly how these APIs should work. I think that there are pros and cons of the US version, which is a little bit more market approach. Basically, everything is they're not taking away the control of the large banks. But on the other hand, the large banks are providing fairly good services to the fintech community and actually applying a lot of technology and enabling a lot of great things also. So it's just different approaches.
Yeah, I think there was some long-awaited legislation that came through in the US to regulate that kind of open banking, and I think that the banking industry then sued the regulatory body within the days after that it was released. And now with the new Trump administration, they've actually shut down the entity that introduced it. So, yeah, I guess you're hoping the market mechanisms will operate. Although I know the natural instinct of bankers can be, well, why should we open the gates to the vault? So I guess that's a cultural thing, maybe.
Might be. We don't know who the winner of this will be.
It's a long game, and we're I think the thing that struck us in Keeper Solutions was that we were seeing, certainly on the consumer banking side, that the net promoter scores of the pillar banks, of the legacy banks, tended to be operating in that 20 to 30 point range, whereas that the fintechs that were coming in were tending to be very focused on the user experience, and then had net promoter scores in the 80 plus range, and that differential of user experience, in our opinion, would be driving consumers from the legacy banks towards the new banks. I suppose, like when we see what Revolut is doing, that that kind of is coming through, and maybe it's a bit mixed in other areas. But I was down in Canary Wharf last week, and I was delighted to see that amongst the skyscrapers of the Morgan Stanleys and the Ernst and Youngs and the State Streets, now there's a Revolut skyscraper down there as well. So, and I think
Revolut is a wonderful example of exactly what you're mentioning. I think there are, from the Nordic region, we have, of course, Revolut is great. We have Trustly doing a great job. Klarna, of course, doing a great job in focusing on what the consumer actually wants and what's a really good modern way of experience these kind of services. But in the back end of it, there's nothing new. This is just banking. This is lending money, and it's the same with Revolut. It's just a bank, but they're doing it in a new, fresh way. Well. Yeah, and what we don't want, of course, is the large bank to be in the way of these new great solutions. And as you're mentioning, in the US, they're doing a lot to stop this revolution, of course, and that's where regulations come in.
Yes, for sure. So Michael, you must have become very adept at integrating your solution into, integrating with many APIs, because you're talking about, many banks in many different countries, that your customers are enterprises, the corporate treasury departments of enterprises who.
So there are companies like, mentioned H&M and Thule, Duni, Acne selling clothes, and, large, if you have a couple of 100 million euros or more in annual turnover, probably you have a lot of currency exposure. Either you buy in different currencies, or you sell in different currencies. It's name of the game, so to speak. So ICP for us, ideal customer profile for us, is somewhere around a couple of 100 million euros and up in annual recurring, annual turnover. Yeah.
Okay, so
in Europe, we're only in Europe today. We were talking about the open banking directives in other markets. It's also relevant for us, but it's a priority thing. We're a small tip.
Yes. Okay, very good. So could you talk to me a little bit about your approach to innovation and how that's helping you achieve your business objectives?
So innovation to me it's a matter of launching something that adds more value to your customer than the customer has from other opportunities, right? So you always want to be. So if you want to be a little bit negative on that statement, you might say, well, that means you always have to be the best in what you do, right? And the answer is, yeah, basically that's what I'm saying. You have to be best. The in digital businesses like you are in, we are in, and everyone else maybe listening to this podcast are in, the alternative is always 5 seconds away. You just Google it, you find someone else, and you click it, and then you're somewhere else, right? So you always have to have the best service. And in Fxity's approach, we've decided to do this really slim. So we do it. This is, as you've heard, really a niche thing we're doing. We're handling currencies in large enterprises in a very structured way with automation, but also we're not doing it for small companies. We're not doing it for companies that doesn't have a currency exposure, etc. So there's a lot of the market is slim, it's very niched, but we're doing it in the absolutely best way that small task can be handled. And
Yes.
that is, we're not a treasury management system, we're not an ERP, we don't provide any super cool other features on how you can also pay your invoices or cross-border payment or whatever. We don't do that. We only do this liquidity, cash management handling.
And
So to me, it's about being the best in what we do. That's innovation to me.
great. And like what strikes me is both knowing what you do and what you don't. So important, because by being able to say, well, we don't do this, we don't do that, we don't do the other, and knowing what you do, you get that laser focus, and it is very slim. You're doing treasury management for enterprises in the 100 to 2 million turnover in Europe for now. You know what your market is, you can speak to it with confidence, and you can go very deep. And as you say, by being the best, you can go very deep and you can find it.
And also product development becomes so much easier. Because when you know what problem to solve, you just focus on solving that problem. And then you go a little bit, you lose a little bit focus anyways, but it's still super focused. And if you know what you want to achieve in a very niche product, it's I would dare to say that the product development, making sure that we're always better than the competition, or even without competition, making sure we get better all the time, it's fairly easy actually to prioritize when the niche is slim.
Great. So I know that like in fintechs now that everyone's thinking about AI, obviously machine learning has been a mainstay over the years, but now in the last few years, people are looking at Gen AI and seeing how that can help either drive growth, adoption, customer experience, or productivity. Would you be able to talk about what you see as high value use cases for AI, or specifically Gen AI in your operation?
Yeah, so I mean, AI is perhaps the biggest thing that has come, of course, in many years, and there is no doubt that the fintech industry will be revolutionized with AI. It's very clear. I mean, you have everything from if you take credit scoring or customer support, financial planning, forecasting. I mean, there's so much you can do that is today done with enormous Excel sheets and lots of bad processes around it, and manual processes and operational risks, etc. So that's very obvious, of course. Then problem is, when implementing AI in some of these very important flows, you also implement new problems, right? So that's such new problems is not a problem, it's just challenges. The problem with AI is quite a lot of it is black box. So you cannot see what exactly was wrong. And this is also legislations also comes into play here, because, I mean, how will the financial institution, how will anyone agree that a black box can determine if you get a loan or not?
Yeah, well, explainability is needed.
It is, and that will be a challenge, of course, for AI to have explainability of exactly why you got the loan and I didn't get the loan.
Yes, yeah. I know there's a fintech in Ireland called Vesta Insights, and they're trying to use a combination of machine learning to provide the decision, but then Gen AI to explain the decision, so that there's that explainability. You need transparency, as you say. The black box is an issue, and then when things go wrong, and how can you need to understand how it went wrong as well, I guess.
Of course, and machine learning is, of course, that's actually nothing new at all.
No.
And a lot of the AI we're talking about today is machine learning is just machine learning, right? So it's not just because machine learning is very, very good, but it's when it comes to Gen AI and the black box part of it, of course, fintech will have more trouble with this than other kind of software developers or SaaS services or internet companies of any kind, of course, because there is just, it's more important because it's money involved, right?
Yes,
Yeah.
and you're regulated. So do you think then that we've seen an awful lot of experimentation with proof of concepts, and we've seen an awful lot less Gen AI based or agentic frameworks actually getting into production in fintechs so far? I think there's a lot of work going on it, but there's a lot of challenges too that makes founders worried about bringing it into production, would you say?
Of course, but a good way to handle it is the way you mentioned. You use machine learning for parts of it or whatever other logic you want. And then you let AI, in this example, you let AI explain what was done. Okay, great. So it actually was not responsible for the calculations, but it adds value anyways, right? And I heard about, I think it was Klarna mentioning that 80% of their customer support cases were the same 11 questions.
Yes.
And these 11 questions, it's super easy for AI. It's like, it's basically, it doesn't even have to do with fintech or regulatory stuff or anything, right? It's just a customer support service based on some internal APIs, of course, to be able to answer these questions. But it's an obvious thing to automate.
Yeah.
It's stuff like where is my order, or have I paid this? Why did you take this? Why was there a fee extra here? Like these are super simple questions to answer for an AI.
Yeah. No, they are, and like the theory being, will 80% of the questions, they're down to 11, and we should be able to cover them automatically and then quickly transfer to a human. But unfortunately, so often you see that the experience on these customer support bots is low. It's not great. It's not that helpful, and also now the people are so used to using LLMs constantly, the expectations are high. So if you put something out there and it's not really adding value, people say, that just give me a human, and they become irritated. So that's.
But I'm positive. I dare to say that if we're not there quite yet, we will very soon be where an AI easily can answer these 11 questions.
Yeah.
In a way that it's actually better than a human would do it. And this is, I dare to say. The question is, what do you do with the last 2-3%? Because the cool thing is when an AI, of course, can answer all questions, or when they can handle actually core processes. In our perspective, it would be, how could an AI trade currencies in a super efficient way, adding in all the input that a senior FX trader would do. Like you could, I mean, you could argue that an AI could find all the arbitrages and stuff and actually do some light trading with currencies for a company. Maybe you don't want it to, but theoretically you could actually make money. And and this, but this is, I don't think this is not a development that we would like to lead. We would like to provide a company with the most sustainable, the best, the most robust solution that solves 99% of the problem. The final 1% is it's just opportunistic. I don't see the value add.
Even at 80-20 now, I think there's huge opportunities for efficiency without degrading customer experience or damaging the brand, probably.
Absolutely.
Yeah.
I agree. Yeah.
Very good.
What is your view on the differences in AI development in fintech in Sweden compared to the US?
Oh, obviously, in Sweden or the EU, we've got the AI Act, and I think it's a heavy burden for innovation here, where in the US, the attitude is more, go ahead, experiment, put stuff out there, and as issues emerge, we will regulate to deal with those risks. whereas the EU has been more prescriptive and has said, well, you must do it this way or this way because of these potential risks. So, and I think that is unfortunate for innovation within the EU, because it's the legislators trying to tell the innovators how to go about their business and trying to prevent potential risks before they've emerged. And, I think it's more expensive to innovate and more difficult here. And so I would be concerned about the difference in approaches. Personally, I'd prefer to see risks emerge and then regulation rather than the other way around.
Yeah, I agree.
Yeah. I think the UK is, I actually think that they're beginning to get some Brexit dividends, maybe by not being as restrained with the regulation around AI. And in the UK, I'm also seeing the regulator leaning in, where they're co-innovating, where they're setting up labs, where they've got the sandbox, the FCA sandbox, and that they're so. I think that type of dynamic is quite quite positive. So, but look, I mean, even with the regulation in Europe, it's not going to stop us regulating. We've just got a bit more overhead, and hopefully we can use AI as well to deal with the regulation more effectively and automate some of the undertakings and measure and mitigate the risks as well.
I agree.
All right. So at this point, I'd ask you, Mikael, what does the next 12, 24 months look like for Fxity?
Yeah, so it's about continue to develop the product to make it even better and even happier clients, and that's always core to growth to me. And then it's about onboarding more clients. We have customers right now. We have like 12 companies, I think, in the onboarding phase. So it's fairly lightweight, but we just need to get them up and running, and the sales is going well. So we have a tough schedule, but within 12 months we will be at least double the size of today.
Fantastic. And I'm guessing that laser focus that you have, that understanding this is our market, these are the issues that face it, allows you then to really say, let's keep locked on this, let's do more of it, and that you can manage your product roadmap.
Of course, it also helps sales, right? If it's easy to describe what you're doing to a company, exactly what problem you want to solve, the marketing, the sales it's not very complicated for us.
Great. And a corollary to that then is what do you see as the biggest challenges that you face in that journey?
I don't see this as a challenge, but I see it as something that I'm looking forward to, and that is more competition. There will be more competition. I mean, the fintech companies popping up right now, also the very AI-focused ones, the bigger groups, the private equity sponsored versions of it, and also the venture capital environment is a bit more vivid, a bit more growing right now than only a year or two ago. So I think I can see that Germany is becoming stronger and stronger in their startup scene, from being, of course, super in the forefront a few years ago, than being pulled back by the economy. Now I see them growing again. So I think I'm looking forward to more fintechs out there and more to compete with.
Yeah, you sound confident. You're welcoming more competition. Does that not, in a way, make it more difficult for you to win customers or put pressure on your margins?
At least it puts pressure on us to as I mentioned before, we want to be the best.
Yes.
And if there are more competition in the market, being the best means higher pressure on ourselves, and that's just good. We have to work harder to earn earn our clients.
You just stay at the very front of the pack, and that's where the action is happening. Brilliant. Well, Mikael, look, I think as you said at the start of this, the best is all ahead, and it sounds like that. So thank you so much for coming on the pod here and telling us about your journey, and we look forward to monitoring your success over the coming months and years.
Thank you for having me.
It's a pleasure.